Hi, I'm Sandy Ray, founder of Sandra E. Ray, CPA, where we alleviate financial headaches so that you can create a bigger impact. Today we're going to talk about nonprofit organizations and when you need an audit. We touched on this a little bit last week, and I wanted to go a little bit more in depth on it. For clarification, we are talking about a financial audit conducted by an independent CPA. Basically, there are 6 scenarios that can trigger a financial audit. The first one is a government request. A federal, state, or local government can require a partial or a full audit of your organization. Currently, there are 26 states that require an audit report be completed with either your annual corporate filing with the Secretary of State or your charitable solicitation registration requirements. Generally, the audit requirements are triggered when your gross revenue reaches $500,000 to $1 million. But each state is different, so you need to check your requirements, and you need to check the requirements where you're registered for charitable solicitation. The second trigger is high spending. Now, I'm talking about basically government money. The federal government can require an audit of any nonprofit that receives governmental grants. Specifically, we're talking about organizations that receive federal funding of $750,000 or more. If that is the case, the federal government requires a single audit. If we look to the Single Audit Act of 1984, which was amended in 1996, it allows the federal government to monitor organizations that receive federal funding. And this allows them to look at your operations. The scope of the single audit is much larger than a financial audit. They typically look at your entire operations in addition to your finances. Now, this will include lots of testing of your internal controls to make sure that they're adequate and that they're being followed, that the financial statements are both accurate and in line with federal cost principles. Now, this is slightly different than generally accepted accounting principles, but very similar. And that your organization complies with specific laws and regulations for that particular funding stream. Remember that federal funding can come from many sources because it can be filtered through state and local governments or other foundations. So you need to be aware of the source of the funds because all of those different sources can add up to $750,000 without you even realizing it. So we need to keep track of that. The third trigger for an audit is a government contract. When you have a contract with the federal, state, or local government to provide services to your community, you may be subject to a compliance check or an audit. Either way, the compliance check or the audit of your finances is a way for the government to ensure the accountability of the funds that are being spent. The fourth trigger is a grant proposal or a grant agreement. Many private foundations are now asking for audits as part of their application process. They want you to demonstrate that you're spending your funds as agreed on with your mission. And some foundations just want a copy of your most recent audit. If you have an annual audit, just give them the one that's completed, basically. The fifth trigger is a bank loan. Some banks require you to submit the most recent audit to receive a loan. They use that as part of the loan application process in order to determine if your creditworthiness and if you have enough assets to cover the loan. Additionally, some banks are requesting an audit every year to make sure that you're complying with the loan and that you still have those assets to cover the loan during the term of the loan itself. And then finally, the sixth trigger is your own peace of mind. You may choose to have a financial audit conducted to make sure that your operations are running smoothly, that policies and procedures are being followed, that your reports are in compliance with generally accepted accounting principles. And as we said last week, check your bylaws, because your founders may have determined that they want an audit every year. So you're required, forget about all those other triggers, you're required every year by your bylaws. So you've decided that you need an audit. What do you do now? Well, first, you're going to send out a request for proposal for audit services. And if you determine that you need a single audit, you need to make sure that that is in your RFP. Not all auditors are equipped to handle the greater scope of the single audit. Hire your auditor and sign their engagement letter. Most auditors are great at helping you through this process. Then we're going to schedule the audit and get the preparation list from the auditor and gather all that documentation. They're going to be asking for documents about your organization, your organizing documents, minutes of the meetings of the board and the committees, contracts, loans, agreements, all those types of documents. They're going to be asking about all the supporting documentation that shows the balances on the statement of financial position are correct. In addition to bank statements and reconciliations, they're going to want to look at your schedules, like your prepaid expense analysis, your fixed asset schedule, and your deferred revenue analysis. They're going to look at transactions since the end of the year to determine if your accruals are accurate. They're going to look at cash to see that accounts receivable invoices were paid. And they're going to look at expenses to determine if anything that was paid after the year end should have been accrued into the audit period. And they're going to want schedules that reflect the activity for your restricted funds. Basically, they're going to want a beginning balance of your restricted funds, any new restricted funds that were received, and how restricted funds were spent to come up to the ending balance. It's an important piece of the financial report. They're going to look at your revenue. They're going to do an analysis. They're going to look at your donor database reports and compare that to the revenue on your financial statements. If you have events, they're going to do things like statistical analysis. How many attendees were there? Was there a registration fee? Does that revenue seem reasonable that you've presented on the financial statements? They're going to look at your expenses in the same way. For example, for salary expense, how does that compare to the 941s that were filed? They're going to look at professional fees to see if there's lots of legal expenses. If there's lots of legal expenses, is there an activity that's going on that may require some disclosure regarding a potential liability, or maybe a liability needs to be booked? They're going to look at your repairs and maintenance expense. Is there any fixed assets that should have been recognized and capitalized over several years rather than being expensed completely in the current year? So there's a lot to do here. We recommend that you don't wait until year end. We like to do a review of all of the statement of financial position accounts on a regular basis. Not just reconciling your bank and you're done, but look at those other accounts, at least monthly or quarterly, or maybe a combination. Maybe there's a few accounts that you look at every month and there's a few accounts that you look at quarterly. Prepaids is a great example of a monthly type of thing that you want to look at, while maybe assets held by a third party, say you have some funds at a community foundation, maybe you only look at that and post investment earnings on a quarterly basis. So to summarize, not all organizations are required to have a financial audit, but several are, and the triggers are the state where you're domiciled. Does it require it? The states where you have charitable solicitation registrations. Is it a requirement for that? Governmental funding requirements for federal and state grants. Are you subject to the Single Audit Act? Grant applications and agreements, loan covenants, and for your own peace of mind and that of your donors. If you need an audit, be ready. Prepare all year long. There's so much to do at year end. Don't add an entire year of audit preparation to the list. Be prepared well in advance. That will save you time. That will make the audit go smoother. It'll save the auditors time and keep those audit costs down. I want to thank you for joining me today. Remember that creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.